100,000 only.
You mean you pay only 500,000?
Yes.
They asked for 3 million. Why am I being asked to pay more?
I don't know.
You must know. We have the same level of capital, same rent, same premises. We even meet the same expenses. Why am I being taxed more?
I don't know. But for me, I sent my income and expenses via the URA website.
So they are punishing me because I did not send that through the website. Mugisha, you know these things. You know the type of expenses we go through here.
I know. But how will URA believe you if you don't write them down or keep records for your receipt as proof for your income and expenses for your butchery?
Mugisha, you mean you write all these things down?
Yes, I do. I write every detail. You see, the good, the amount, and the person involved.
But where do you get the time to write all this?
Immediately the transaction is done, or at the end of the day. But at minimum, I must know the income and expenses for each day. Otherwise, it is very easy to forget or confuse.
So, this is how your tax is being reduced?
Actually, it automatically shows me the tax I have to pay without reducing my business capital. It also helps me not mix my business money with the money I get from the garden. Aha. Do you know that this book is showing me that you haven't paid me the carton of soda I advanced you last month?
Mugasha, you also remember that?
Yes. This book helps me to remember every detail about this show.
Mugasha, guy, you know things and you don't even tell me.
You didn't ask. Try it. You'll thank me later.
Let me first deal with the customer.
But wait, don't forget to pay the URA tax in time.
I won't. I will not.
Okay.
You got no revenue authority, thanks you for paying taxes. Thank you. Taxi care.
Uganda joins the world today to celebrate Anti-Corruption Day. At URA, we spoke to different staff, including officers and top management, on the different ways that corruption can be fought in Uganda. This is what they had to say.
My name is Paul Wafula.
And I am Atkunda Ann.
Today we are here joining all Ugandans in the fight against corruption.
In my opinion, if you're to deal with corruption effectively, one of the major things that you should deal with is the leader should walk the talk. Secondly, manual processes should be automated to minimize the human intervention, as well as we also need to set up punitive measures to those who are found to be corrupt.
To think of how do we also engage technologically, how do we bring in the tech side in the fight against corruption, how do we get more systems, better software to track, how best can we also invest that corruption.
Good morning and welcome to today's MCHUZI. I'm your host today, Elizabeth Nakiru, and we have an amazing tax expert who has been with us before, but for today we are looking into computation of rental income tax. Good morning, Patrick. How are you?
Good morning, Elizabeth. Great to be here once again. Patrick Bagum is my name. I appreciate you guys for paying your taxes. And we're here to remind ourselves basically about what we know. How do you compute rental?
Yes, and February is such a short month, but I feel like it's not ending. Anyway, as we start off with rental income tax, someone would be wondering out there, what is rental income tax?
Ideally, before I talk about rental income tax, because see, rental income tax is like an output of something. So rental income comes from rent.
Yes.
That is paid. So before we go to rental income tax, better tell our listeners and our viewers that rent is a payment in a brief that is received by a person. And when I say person, It takes into account an individual, a partnership, a limited company, an institution like Makerere, or MTAKIA, or any corporate body like Patrick Make and say, Patrick, you are limited for a year of income. So that's where we get the rental income from.
Okay, and you've given a definition of a person. So someone out there, a taxpayer, would want to know, I have maybe my house, I'm living in it. How does it concern me in regards to rental?
That is, actually, there's a common misconception that rental income tax is only paid by people who are letting out commercial buildings.
Okay.
But for the purpose of taxes, it is paid by, even if you're renting out a residential property, so long as you're getting a payment, it amounts to a payment from the letting out of a what? A movable property. And in this case, I talk about a movable property being land or buildings. So whether it is a commercial or residential, so long as you're renting it out, you qualify to pay rental income tax.
Okay, you talked about it has to either be land or a building.
Perfect.
So if I'm hiring out my land, do I also pay rental income tax?
Maybe when I was defining, I shortened the definition of rent.
Okay.
And if you are to go like the way the lawyers, lawyers prefer to quote in the law,
Okay.
but if you're not, I mean, I'm not quote. I'm just going to take it to make it simple. So in a brief, when I say rent, you can say it is any payment, any.
Yes.
That these people even go and pay over and above. That's what people say, any payment, including a premium or like amount. For any consideration, and the consideration you're talking about applies, received from the use,
Yes.
or occupation of,
Okay.
or the right to use or occupy land or building. So from your scenario, I see you are giving the right to someone to use. So in a brief, you qualify to pay that rental income tax.
Wow. Okay, that's quite interesting. So if I may ask, how different is rental income tax from property tax?
From property tax.
Yes.
That is a hard one, but also another one. Okay. It is a commonly asked question because we are fairly taxpayers, and they would be taxpayers. Always wonder, why should I pay property tax at the same time pay rental tax?
Rental tax, yes.
And these are the same what? Institutions.
Yes.
But for the purposes of today, you can say rental is collected by Uganda Revenue Authority.
Okay.
While property tax is imposed by, can you say urban authorities? And when you talk about urban authorities, you can talk about, or district. You can talk about KCCA, for example, like where we are, or any municipality. And just basically on commercial buildings. That's the brief.
Okay. Is rental income taxed separately from business income?
Yes. One, I may be a taxpayer,
Okay.
but having different sources of income. There are those people who are lucky, they have worked so hard. He or she is working, at the same time he has got a business somewhere. He has also put up a commercial building somewhere he or she is renting out. Okay. So before financial year 2014, 2015, the two used to be combined. A taxpayer would combine all sources of income and complete tax.
Okay.
But effective July 2014, the law was amended to allow taxpayers to separate income from business and income from rental. So to answer you, it is separate and taxed separately, though you feel the same return.
So let me ask, are you, just for clarification to our taxpayers, are you saying that after the law was amended, someone who owns a business has to pay a separate tax on that business and also has to pay a separate tax on a building they're getting income from in case they're the owners?
Yeah, spot on. Now, if you have got business income,
yes,
at the same time rental income,
okay,
of course for clarity we are using the same return. But within that return you are going to feel it has got different schedules. We are supposed to record income from business
okay,
and income from rental. And to be specific, that income from rental, at any one time, if you want to remove any expenditure, it must be strictly related to that income, which is included in your return, and it is for rental purposes.
So that means someone who owns both a building and a business has to file 2 separate returns?
No. To get me right, I said it is one return. But that return caters for
Both?
both.
Okay.
Can include income from mining, can include income from retail,
Okay.
can include from manufacturing. What is going to be different is the different schedules within that return, where the income is supposed to be reported separately.
Okay, makes sense. So we just needed to know, our viewers would like to know, when it comes, there's the way you've described, there's property income, there's rental income, there's business. So how would one know how to compute rental income tax?
Now, it takes me back to the key question. We normally keep reminding ourselves. As I said, when we are here, basically we're not talking about something new.
Okay.
We expect any taxpayer to be keeping records.
Okay.
And these are the records that at the end of the day, they are going to help you when you are trying to compile and summarize the income. They are from different sources of your business.
Okay.
One, we expect you to be having maybe like records for all your tenants. I don't talk about records, in this case I talk about rental agreements. And if a taxpayer yesterday for VAT, we expect you now, like recently, we need that IFRS what? Invoice.
Okay.
So now, when the year comes to an end, at the end of the day, you are supposed to gloss up all the incomes received from the tenants, and also having a separate books for the incomes received from the other sources of what? Business, like maybe mining.
Okay, so viewers would like to know or have an illustration. Do you have one of how to go about computing rental income tax for individuals, partnerships, and companies?
Maybe before you go there,
Yes.
we need to know, when are we supposed to file this return?
Yeah.
Because yes, you may compute, but this might say, hey, what about when am I supposed to file this return?
Okay.
So, like any other tax rate, we have got what they call a provisional return and a final return. And in brief, a provisional return, basically this is an estimate. Either you have been business and you know your business has been operating.
Yeah.
Now, for the purpose of rental, you know, for the last 12 months, I had the 12 units, but only maybe around 8 were occupied. So you can say, right now, since at the start of the year, maybe 12 units are going to be occupied. But of course, whenever projecting or budgeting, we are hoping for better. So in this case, we expect both the individual and the company to file a provisional return. So when is it required or when is it due? So for the provisional return for individuals, you know, if you go to the law, there is a language they are using, but me I try to make it simple. You are supposed to file a provisional rental return within 3 months from the start of the year.
Okay.
What does it mean? That if the year, your year stops on 30th June, so look at July, August, September. So by 30th September, we expect any individual to must have filed a provisional rental return.
Okay.
For companies, it must be filed within 6 months from the start of the year. So in this case, we count from July up to December.
Okay.
Now, for illustration purposes, should we talk about also final or payment? You know, we talk about filing only.
Okay, let's have the computation at the end. So for now, we can talk about the provisional and the final and how to go about it and the due dates, just like you've been explaining.
Okay, so now, after filing, we say that for individual, you file within the first 3 months from the start of the year.
Okay.
So when is the payment required? The payment for individuals, the law is using a certain formula somewhere, but me, I'm trying to make it simple. You pay in 4 equal installments. That is for provisional. And we are talking about the first payment should come within the first 3 months from the start of the year. That is individual. The second one should come within the 6th, 9th, and 12th month.
Okay.
Key to note is that once the installment becomes due,
Okay.
he starts saying this is a debt to the government.
Okay.
So the interest and the interest will arise once it has become due and you have not paid. Then
Okay,
for companies,
Patrick, just hold your thought there. So you've said there are 4 equal installments for
Perfect.
a provisionary term.
yes,
So what if I have all the money to pay and I just want to pay everything at once instead of going through the installments?
now those are the people who have been appreciating, I think, since when? Since yesterday? Yes, when you are getting a call, thank you for paying your taxes.
Okay.
Remember, you can't develop Uganda alone.
Yes.
These are the
that's true.
people who are developing Uganda.
Oh.
So when we get such a taxpayers, it's much and much appreciated. Well,
Okay.
these are the people who are helping the country to run and to help the government to meet the services at a shorter period than waiting and going and get loans from different countries
Okay.
and the banks.
Makes sense. Okay, so
And for companies, we are the taxes is due within first 6 months, but it's supposed to be paid in 2 installments. And they're still using a formula, but now I just because they say, is it 50%
okay.
times A? A means that is the provisional tax payable minus B. B means that is the credit in the case the person who paid you had deducted some money.
Okay.
So the first installment is required within 6 months from the start of the year, and the second one within 12 months.
Okay, that
As simple
makes
as that.
sense. I hope our viewers have heard that, and Patrick has been quite clear. We could move on to the computation,
The
maybe show them
computation.
an illustration of how to go about the rental tax income.
Don't you want to tell them what about the final? We talk about the provision.
Oh, final, yeah.
You may say, if you fail a provisional return, is it the end?
Okay,
Now remember, we said the provision is an estimate.
okay.
Now when the year has ended, now you know, reality has come in, you know what transpired, not so? So we expect you to give us a final return.
Okay.
Because the final return is what which is giving us the clear picture of exactly what transpired. So in this case, this final return for both individuals and the companies is supposed to be filed within 6 months from the end of the year.
Yeah, okay.
And the payment, the same, supposed to be paid within those 6 months.
Okay. So, just for clarity purposes again, you say the provisional return is not the final return.
Perfect.
So meaning the provisional return can be amended by a taxpayer. So my question is, if I have been filing these provisional returns and then I realize that my final return is not the same as the provisional return, maybe I have overpaid, can I go back and amend and can I get that money back?
Wow. You want to get the money? I'm
Yes.
assuming you're also a taxpayer.
Yes, we are all taxpayers.
Yeah, the law is flexible, and we know that we talked about the provision of being an estimate. Things may change for good or for bad. It's either way, positive or minus. So what does it mean? That before the year ends, the law allows you to amend.
Okay.
And I advise you to amend, I can say 5 days before the end of the year, to take into account of any network challenges. So in a brief, yes, you can. Now, if you had overpaid, that money remains on your account to be taken as a credit against the future what? Payments. If you opt to apply for refund, the law is also very clear. Apply for refund. But remember, you must be having your documents well prepared to apply for that refund.
Okay. Thank you, Patrick. Is there anything you'd like to add on before we move on to show them an illustration of how to compute and come to a figure?
There's a thing whenever I come, I don't know, whenever I come here, there are 2 things that we tend to ignore, but they are key in whatever we do, more especially in for tax purposes. Record keeping.
Yeah.
Record keeping, it is very key. Whatever you do that is about your company affairs, whether it is rental or payers earn or business income, please keep that record.
Okay.
2, when you are making a payment, don't wait to pay on the last day of the month or of the week, because the last day may be a weekend and you may not be aware. The last day may be when the bank doesn't have network challenges. So what does it mean? it may go past the due date, and you just start paying unnecessary what? Interest.
Interest.
On the amount actually which you even had. So those are my key reminders to our taxpayers.
Okay, thank you, Patrick, so much. And now let's dive into the computation of rental income tax as illustrated by Patrick for us.
Members, we're going to, dear viewers, we're going to look at both individual, partnership, and companies. And maybe what we didn't talk about was about the expenditures, our expenditures.
Okay.
I would have expected maybe our viewers to ask us, this financial year, what has happened? Because it is going to help us in the computation.
Yes,
So-
maybe you could just put it in there as you go.
In there.
Yes, as you explain.
So for this financial year, and the financial talking about is, when is it starting, by the way, remind me?
2022, 2023.
So for tax purposes on our side,
Yes.
we can say from 1st July.
July, yes.
So now, assuming I've got an individual here, individual, can make it big for purpose of viewers to see. My font.
Is there a way to make his
Okay. Okay. So individual, assuming the total gross rental from all the buildings, assuming gross rental income. In this case, the financial year, we are going to be specific, financial year 2022,
Yes,
2023. Now, assuming this individual, the gross rental received at the end of the year is maybe, can say, 40 million. Can I say 40? Can I say 48? Instead of giving a flat figure, 48.
Okay.
If it is 48, we are saying that this particular financial year, the law was amended to only take into account a fixed figure, which we are calling an annual threshold. So if an individual and your gross rental for the period of 12 months or for that year is 48 million, what the law is giving you is only giving you a threshold of 2,820,000. Now, how do you get that chargeable income upon which you are going to charge that rate?
Okay.
So, chargeable income for rental purposes, we are going to get the total gross rental received, which is 48 million, minus the threshold for the year, which is 2,820,000. So this one is going to be our chargeable income for the year. So if individual, what does it mean? The rental income tax payable will be equal to 12% times the rental chargeable equal sign equal to 12% times 45,180,000. So if an individual out there and you are seeing what you are computing here, assuming that is the figure, that will be the tax payable if it is assuming that is if it is rental.
Yes.
So what does it mean? For this financial year, we normally talk about arrival what? Expenditures and losses. The individual was not catered for. The only figure they're allowing you to remove from your gross rental before they charge you 12% is only 2,820,000. So, for partnerships, assuming it is the same income, maybe who is a partnership? A partnership, that's why you find two or more people come together. And if you go to register of companies, they have got what they call sharing ratios. So assuming now you have got two partners here. Here I've got partners, maybe I've got maybe Moses and Isaac. These people can say that for us we're going to share in the ratio of 3 to, maybe 3 to 2.
Yeah.
Mean that now Moses has more shares compared to Isaac. So what does it mean? Using the above example, the tax payable remains the same for individual. But now what does it mean? If these are partners, they are going to share in their profit and loss sharing proportions. It must have been spelled somewhere. So if you go to mathematics, they're going to say if you add the two,
Yes.
so you can just say total. I don't know whether they use it in very good terms. Can you say the total share is what? 5. So for Moses, what does it mean? How much tax is Moses going to pay? He's going to get 3 divided by 5, but times this tax here payable.
Okay.
So how much does he pay? He pays 3,252,960. Can I say compute for me the other one? Maybe give me the formula. Because the same would ask our viewers to tell us to compute for us the other one. How would we compute the second for Isaac?
So for Isaac, I would assume it is 2 out of 5 times.
It's a total of 5. Now remember, since we're using Excel,
Yes.
to say equal sign, maybe open the bracket 2 divided by 5.
Yes.
Times, should you multiply from within here?
Yeah, we can.
Times 5. Close the bracket. How much do you get? So Isaac having a lower ratio,
Yeah.
he pays 2,168,640.
Yeah.
So the total should be equal to what would have been the total tax payable if it was an individual.
Oh, okay. Makes sense.
It makes sense. Now, what about a company? If it was a company, you can say maybe Patrick Limited. It is a company. For companies, they were given a cap of 50%. Now, when we talk about these caps, what is a cap?
50% of deductions.
What is a cap?
It is, let's say, the limit at which they can.
A cap is a limit. Okay. Now, you are saying that for companies, to begin with, you are saying there is a limit. We are going to get a cap of 50%.
Okay.
So what is this 50%? Because remember, we talked about expenditures, losses. So this 50% has been limited to the gross rental received at the end of the year. Okay. Now, what does it mean? That using the similar situation, assuming this company, remember we said for individuals there is no expenditure and losses allowed. And the same applies to partnerships.
Okay.
Because at the end of the day, the partners, these are going to be individuals. Now, for company, assuming this company, now assuming the gross rental, we are going to use the same example.
Same example, yes.
The gross rental income received, gross rental income is how much? Remind me the figure.
48 million.
48 million.
Yes.
Assuming it is 48 million. Expenditure, maybe we can say that this person maybe got a loan. But before you go to the loan, maybe expenditure in bringing it to that, how do you call it, environment where the tenants appreciate You can say maybe incurred 30 million or 25. Let's just say maybe say, I can even say 40. And this person will come and add interest. Had even bought part of the money, maybe interest on a loan. Maybe like 2.5. So what are we saying? We are saying the law is very clear. This financial year, 2022, 2023. We are saying what they're only going to do for you. The law, they're only allowing you a limit, which is 50% of gross rental.
Okay. Yeah.
So what the law is saying for you, the expenditure they are going to allow you, expenditure for losses, for expenditure allowable, just use expenditure allowable, expenditure and losses, just go to be 50%, 50% of gross rental. I have to take that keyword, gross rental. And the gross rental in this case we're talking about 48. So how much will it be? Elizabeth, am I with you? I'm chatting here with you now. You are my immediate viewer. So gross rental here is 24 million. So this 24 million, what does it mean? The tax payable by this company will be, you are going to get gross rental, which is 48 million. You're going to get gross rental, gross rental less the allowable expenditure. And we said allowable expenditure is only restricted to 50% of the total or gross rental income. Allowable expenditure. So what does it mean? You're going to get 48 million minus allowable expenditure, which is 24. You are going to get 24 million. But remember, this person had expended of 40 million at the same interest of how much? 2.5 million. So what will be the tax payable by this company? Tax payable by the company is going to be 30%. 30% of the difference between the gross rental minus the what? Allowable what? Allowable deductions. There's something I want to mention here. Now, what does it mean? Don't mind about the formula, but we'll bring that error. But 30% of gross rental minus allowable deductions. So what does it mean? Some people thought that when you give a cap or a limit, even if your expenditures are below that 50% of gross rental, the law is saying that it is 50% of gross rental. No. Key to note is whatever expenditure, so long as it falls within the 50% limit, it's supposed to be verified by a your officer. So in brief, it must be related to that rental income that you earned. So what does it mean? You're going to get 48 million minus minus 24. If you cross the bracket, you do from here times 30%. 30%. So tax payable will be how much? 7.2. That's in a brief for now. Unless there is any other question regarding computation, but that is a simple question for individuals, partnerships, and companies.
So it doesn't matter if the expenses are below 50% or above.
Now, key to note, if expenses are below 50%, assuming this money, maybe the expenditure maybe was around the 20 million, and it is verifiable, you won't take 50% of gross rental. That is the limit. In this case, we shall only go with the 20 million, which was actually spent in producing that rental income. If it is above, the limit applies. And there is nothing like a carry forward what? Carry forward loss or expenditure. Kagwirao, as people say kagwirao, nothing is going to be carried forward as a loss. Unless, how to make it clear, if the loss was carried forward from the previous financial years. Because people may say that, no, previous financial year for us we had a loss. If you had a loss, it's okay. That is, and it was there prior to 1st July 2022.
Yes.
That one is going to be taken into account. But taking into account that cap or limit of 50%
Okay.
till when it is exhausted.
Okay. Thank you so much. I think you were quite clear. So we'll look into the questions. There is one here from George. George, thank you for watching. He says, hi, thanks for this opportunity. And my question is, what happens if the year has ended? If the year has ended and one only managed to pay 3 installments, and now I need to file the rental individual return for last year?
If the year has ended,
Yes,
to
they've
get
only
in
paid
clear,
3
and has only
installments.
paid the 3 installments
Yes, and now they need to.
file. Now, if you are within the year, we remember if it's an individual, we said you are supposed to pay within the 4 installments.
Okay.
You are supposed to pay 3rd month, 6th month, 9th month, and the 12th month. So in this case, I'm assuming that 1, if it has ended, I'm assuming it is ending and you're within your 4th installment, which is the 12th month.
Okay.
So there, you won't pay any interest on late payment. But if it has passed and you haven't paid the 1st installment, remember you said when the installment is due
Okay.
and payable, it becomes a debt to what? To government. So there will be a small interest charge
Yes.
on that late payment.
Okay, makes sense. And then there is a, I don't think this is a question from Peter Sentongo. Thank you for viewing. He says, please display the workings again. Maybe we could just show them once more and then explain right from individual, partnership, and companies.
Okay. So you said it was what, Peter?
Yes, Peter Sentongo.
Thank you,
he
Peter.
says, please display.
We said for individuals, and here we are specific for this financial year, that is the 2022, 2023. The law is very clear that if an individual and you're earning a gross rental, the only allowed deduction, they are not supposed to quote a deduction, they're only giving it a threshold of 2,820,000.
Okay.
So if you're getting a gross rental income, I'm assuming here it is 48 million.
Okay.
Now the chargeable income, or the income upon which you are going to charge that rental rate, is going to be 48 million
Yes.
minus 2,820,000. The balance you get, which is now 48,180,000, is what you're calling chargeable rental income. Now what you want to do, you only just going to get 12%. I'm assuming where Peter, where you have a phone, you just get 12% times 45,180,000.
Okay.
Now, I said the tax payable by individual. If it is a partnership, because partnerships, at the end of the day, we are going to have individual partners. So these individual partners, when you become an individual partner, same Moses and Isaac, the example you're using, again you become an individual. So using the same tax, income tax payable, but because the partners normally have their profit and loss sharing ratios in their documents. Here we are assuming maybe Moses has 3 shares, Isaac has 2, giving us total shares of 5. So we're going to get this total rental tax payable. We divide it amongst the partners, but in their profit and loss sharing what ratios.
Okay.
So if it is 3 plus 2 equal to 5. So for Moses, we want to get 3 shares, which is entitled to 2, divided by the total number of shares, times the total tax what? Payable. To give us 3.2. Then for Isaac, since he has only 2 shares, we want to get the number of shares owned by Isaac, divided by the total overall shares owned by both, which is 2/5, times the total rental tax payable, and now Isaac will be compared to pay 2,168,000. For the company, and that's why most people normally say, whenever I say that limit, that cap, because some people, the limit is what it always giving you. And this limit, 50%, is on gross rental income, not on expenditure. You now have to mark some keywords. This limit the law is giving you as allowable expenditure is on gross rental. So now we have to assume, using the same example, that you earned rental income of 48 million.
Yeah.
So now the cap, what the law is telling you, will only allow you expenditure to the tune of 50% of 48 million, which is almost a half of 48. And that will give us 24. Okay. So if you had to spend anything above 24, assuming maybe 30 or 40, the law is saying that for us we're only going to allow you how much? 24. Being 20%, 50% of the rental.
Okay.
So at the end of the day, the tax rate that are applicable to companies is 30% of the total tax, total chargeable income for companies. And how do you get it? You are saying total payable. You just get gross rental minus the allowable expenditure. Gross rental we said it was how much? 48. Allowable expenditure is 24 million, 50% of gross rental, giving us a balance of 24. So tax rate for companies is 30%. So get 30% of 24 million, giving us 7.2. Key to note, I have to keep emphasizing, that limit is on gross rental income. And the two, key to note, if your expenditure was less than 50% of gross rental, that's what you're going to take. Because you're only looking at verifiable expenditure, which was incurred while producing that rental income.
Okay, thank you so much, Patrick. That has been so elaborate. Peter again has asked, do rental buildings qualify for IBD?
IBD.
Yes.
Rental buildings. Now, everything we're talking about, you see, before people used to IBD, which people, for us, what other people quite go and detail, but for building purposes, it's called IBD. For people who may understand what Peter is asking, that is industrial building deduction. And before they used to give 5%.
Okay. Yes.
Now if you say 5% of a certain cost, still when you exhaust it. But now we're talking about the law has been, they keep changing the law. Here we're saying, even if you have got IBD, for us we're saying that the only expenditure we're going to allow you is 50% of gross rental. So it goes back to the question the other person had asked. Even if you are computing IBD or not, yes, for us we're saying, how much money did you incur? Is it over and above 50% of gross rental? If it is over and above, shall I give you 50%? So when you say brief, yes, but it must be, shall I give you 50% of gross rental?
Even if it qualifies for industrial building deduction, it has to be within the 50%.
Yes, it has to be within the 50%. Perfect.
Okay, makes sense. We have Judith Airo, Uganda. She's asking, what if I got a loan to build and I'm required to pay back? How do I handle taxes? I am sorry I've gotten late. Maybe you could have explained it.
That is Judith. Now, Judith, I'm assuming Judith. Can you assume now? Are we allowed to assume Judith? If we assume Judith that you're an individual, and this loan you got this financial year, and you are declaring returns for this financial year, you're only going to allow a threshold of 2,820,000. If it is a company, it goes back the same thing. We are going to give you 50% of your gross rental.
Okay, thank you. Anonymous has asked, can you pay twice? Can you pay twice your provisional tax in December and balance in January? I'm assuming probably is asking, can you pay provisional tax 2 times in December and in January?
And January.
If I got it right, yeah.
Dear Anonymous, now for this case, I'm going to say you are a company. We said for a company, you are supposed to pay in 2 equal installments. That is if you are a company. For individual, it is full. So if Anonymous is an individual, somewhere there will be penalties for the other 2 installments because there will be past the due dates. That's the brief I can tell Anonymous.
Yes, Anonymous again. Hello, please throw more light on the losses suffered by a company in the previous financial year. Thank you.
I think Anonymous must be, is very keen on these things. Now it's true that these people, prior to the change, the amendment of the law, they had the losses. Now, and I was clear, that's why I had to just note it, that these companies, if you had a loss, allowable loss or assessed loss, and it is verified, and it was there prior to 1st July 2022. True, to answer him, they're allowable. However, they have to be restricted to the cap of 50%. So meaning that if the loss was over and above the 50% of the annual gross rent for that year, the balance will be carried forward. Still, that particular year to be set to 50% cap till when it is exhausted or utilized.
Okay, thank you. We have Den Lube. He's asking, Lubega, what does threshold mean? Wimbulide. We lost him. We lost him at
remember, I said, I don't know that word threshold is right.
Okay.
That word threshold is used, but in a brief, threshold, I can say it is a fixed amount that is set within the law. But you cannot go by, you cannot go below it or above it. It is just fixed. It's just the threshold. Can you quote a limit?
Yes.
Let us put it in English.
Yes.
Yes.
I think it's a limit that the law provides for when computing the individual rental income. Yes, we have Michael. He says it is clear that it has been gazetted as a law to allow only up to 50% deduction for rental tax purposes. It is good for us as taxpayers to appreciate the rationale, because indeed we incur this expense coupled with the prohibitive interest expense to make this rental business work. 2, doesn't URA think this will cripple the industry, which already has a housing deficit?
Apparently, the laws are made, and laws can be amended, but it depends who is, for us, we are just implementers, but the people passing the laws, they're also taxpayers like you. So I believe if they think it is going to cripple the industry one or the other, there is a research, that's to be research. So subsequently, when finding the short search, they can be amended. As we talk about, they have been amending over and over. It's not like it is permanent and fixed.
So if one day research was done and information came in that actually there is a housing deficit, like Michael is saying, and some of the 50% needs to be looked into, either reduced or something has to be done about it, would that happen? Is that what you're saying, that they can actually amend it, let's say tomorrow or a month from now?
No, laws are amended every financial year, but now it depends who is the key stakeholder in this particular sector. Because you and me, we can't simply wake up and say we are going to submit our views to Parliament. They have got these stakeholders who matter. When they submit the views with the laws they're talking about to Parliament, they look into it, because there is a process of amending the law. So once they qualify and convince Parliament and the lawmakers, so true, they can amend.
Okay, thank you, Michael. I hope we have answered your question. Then there is Mobiru. He says, what's the treatment of interest on loans for companies?
Interest on loans from companies.
Yes.
Now, can we say prior to July 2022, whatever interest that was incurred was allowable. But after July 2022, we were telling you that now there is a limit of 50% of gross rental. So what does it mean? That if expenditure incurred plus the interest on the loan fall within the 50% cap, it will be allowed. Unfortunately, if it goes over and above the 50% of the gross rental, that one, use the word potea. That one, I can't use the word forfeit. Unfortunately, the law we are dealing in, the law, me and you, it won't be allowed.
Okay, thank you. Winnie says, please explain more on the cap if the expenses are below the 50% and also the loss brought forward.
Now, if actually she has made it clear for me. If the expense is below 50%, remember I said, whatever expense we claim, so long as it is below the 50% cap, that is the expense you are going to get. The only challenge comes if it is above. Above, that's when we restrict you. But if it is below, we shall take what is verifiable.
Okay. George says, hi, my question is, was there capping on non-individual in financial year 2021-2022? And if yes, what was the percentage?
If I hear you well, she's
The
talking non-individual.
yes.
For non-individual, no, it was not there.
Okay. Anonymous again, he says, my question, thank you. My question was that as a personal taxpayer, can I pay by first installment in December as provisional tax and amend my return before close of the year in June?
Anonymous, maybe you need to know when do you start?
Anyway, he has continued. He says here, as we also have withholding tax credit for rental payments during September 2022, so URA has already has our credit.
True. Now he has taken me to the other formula which I didn't want to use. So, dear Anonymous, if we have already, on the rental income that you received, if there is any tax that was withheld at source, so we are saying that if an individual and they are going to pay that provisional return, just to get the tax you are supposed to pay, less the tax withheld, so the balance is the one we are supposed to divide in the 4 equal installments.
Okay. Oh, viewers have been quite active this morning.
I'm impressed.
We've had quite a number of questions, and I hope that we've been able to answer most of them exhaustively. But if you feel like we haven't answered your question properly, you can still get back to us on our different social media platforms, and we shall be able to get back to you. Patrick, you've been such a wonderful host, and it has been so clear. Thank you, viewers, for watching, and have a good day.
Uganda Revenue